Listen up, investors. The market's a battlefield, not a playground. Basic investments are for rookies. You want real wealth? You need advanced strategies, the kind Wall Street fat cats use. Think of it like this. Your savings account? That's the minor leagues. We're talking about the financial major leagues here. Higher risk, but boy, oh boy, the potential rewards? Through the roof. This ain't about get-rich-quick schemes. It's about understanding sophisticated tools, playing the market like a pro, and supercharging your portfolio. Are you in? Because in this arena, knowledge is power, and the right strategies are your weapons. Let's dive in and unlock the secrets to financial domination. Options trading sounds complicated? It's not. In fact, it's a powerful tool that can be mastered with some understanding and practice. Think of it like this. You're betting on a stock's future, not just buying and holding. It's like predicting the weather, but with financial stakes. You're buying a contract, the option to buy or sell a stock at a specific price, by a specific date. This contract gives you flexibility and strategic advantage. Think of it as buying a ticket to a concert. You have the ticket, but you decide whether to attend or not. You have the right to go, but you don't have to. This choice is what makes options trading so versatile. Here's the kicker. Options give you leverage. This means you can control a large amount of stock with a relatively small investment. You control a lot of stock with a small amount of money. It's like having a key to a treasure chest without owning the chest itself. It's like having a megaphone for your investment. Your voice, or rather your financial power, is amplified. But remember, high leverage means high risk. The potential for significant gains comes with the possibility of substantial losses. Just like a roller coaster, the ride can be exhilarating, but it can also be stomach-churning. The ups and downs are part of the experience. Options trading isn't for the faint of heart, but if you're looking to amplify your gains and potential losses, it's a strategy worth understanding. With the right knowledge and approach, it can be a valuable addition to your investment toolkit. Think a stock is going down? Don't just sit there. There are ways to turn a potential loss into a gain. Short selling lets you profit from falling prices. It's a strategy that can be very lucrative if done correctly. It's like betting against a company. You are essentially predicting that the stock's value will decrease. Here's the play. You borrow shares from a broker, sell them at the current price, then buy them back later, hopefully, when the price drops. This way you can make a profit from the difference. You return the shares, pocketing the difference. Genius, right? This method can be very rewarding if the market moves in your favor. Example, say a company's stock is at $100. You believe that the stock is overvalued and will soon drop in price. You think it's headed for a crash. This is your opportunity to short sell. You short sell 100 shares, getting $10,000. This is the amount you receive from selling the borrowed shares. The stock plummets to $50. Your prediction was correct, and the stock's value has decreased significantly. You buy back the shares for $5,000, returning them, and keeping a cool $5,000 profit. But be careful. This strategy is not without its risks. Short selling can be risky. If the stock price goes up instead of down, you could face significant losses. If the stock goes up instead of down, your losses could be unlimited. Unlike buying stocks, where the maximum loss is the amount invested, short selling can lead to losses that exceed your initial investment. Remember, short selling is a high-risk, high-reward game. It's essential to understand the market and have a solid strategy in place. It's not for beginners, but it's a tool that savvy investors use to their advantage. With the right knowledge and approach, short selling can be a powerful way to profit from price declines. Leverage. It's like financial steroids. It lets you control more assets than you could with your own cash. Think of it as borrowing money to invest, magnifying both profits and losses. Imagine you want to buy a $100,000 house, but you only have $20,000. You get a mortgage, leveraging your money to control a bigger asset. Same with investing. You can use leverage to buy more stocks, bonds, or other assets. If your investments go up, you make more money. But if they go down, well, you get the picture. Leverage is a powerful tool, but it's a double-edged sword. Use it wisely, or it could cut you deep. Section 5. Real estate building wealth, brick by brick. Real estate, it's tangible, it's historic, and it can be a goldmine. We're not just talking about your primary residence. Think rental properties, commercial spaces, even raw land. You're not just buying a property, you're buying into a physical asset with the potential for appreciation and income generation. Rent it out, watch your money grow, and enjoy tax benefits. Plus, real estate can be a hedge against inflation. As prices rise, so does the value of your property. Of course, real estate has its downsides: property taxes, maintenance costs, and the risk of market downturns. But for those seeking long-term wealth and portfolio diversification, it's a cornerstone investment. Section 6. Commodities investing in essential resources. Commodities, the raw materials of the world. Oil, gold, wheat, coffee, the stuff people need no matter what the economy's doing. Investing in commodities is a bet on supply and demand. Think global population growth, political instability, even weather patterns. These factors can send commodity prices soaring. You can invest directly through futures contracts or ETFs. These track the price of a specific commodity or a basket of commodities. Remember, commodities can be volatile. Their prices can swing wildly based on global events. But for investors seeking portfolio diversification and a hedge against inflation, commodities offer a unique opportunity. Section 7. Hedge funds. Tapping into exclusive strategies. Hedge funds. They sound mysterious, exclusive, and, well, hedged. They're investment funds for the wealthy and institutional investors, using complex strategies to generate high returns. Think of them as the Navy SEALs of the investment world. They use advanced techniques like arbitrage, short selling, and leverage to exploit market inefficiencies. The catch? Hedge funds come with high fees and minimum investments, often out of reach for the average investor. But hey, a little knowledge never hurt, right? Understanding how hedge funds operate can give you insights into sophisticated investment strategies, even if you can't access them directly. Section 8. Private equity fueling growth, reaping returns. Private equity. It's about investing in companies that aren't publicly traded on the stock market. These investments are typically made by private equity firms, venture capitalists, or angel investors who are looking for high growth potential. You're buying a piece of a business, often with the goal of improving its operations and selling it later for a profit. This process can involve restructuring the company, optimizing its processes, or even merging it with another business to create more value. Think of it like this. You're a shark on Shark Tank, providing capital and expertise to help businesses grow. Your role is not just to provide money, but also to offer strategic guidance, mentorship, and industry connections. You have a say in how the company is run, and you share in the profits. This active involvement can lead to significant improvements in the company's performance and, ultimately, its market value. Private equity investments can be illiquid, meaning you can't easily cash out your investment. This lack of liquidity requires investors to be patient and committed for the long haul. But the potential returns? They can be substantial, outpacing traditional stocks and bonds. Successful private equity investments have the potential to generate significant wealth for investors. Private equity is not for the faint of heart. It involves a high level of risk, and not all investments will be successful. The journey can be stressful and requires a strong resolve. It requires a long-term outlook and a high tolerance for risk. Investors must be prepared to weather the ups and downs of the market and the specific challenges faced by the companies they invest in. But for investors seeking to diversify beyond the public markets and potentially reap significant rewards, private equity offers a compelling opportunity. It allows for the possibility of high returns and the satisfaction of helping businesses grow and succeed. Section 9. Venture capital. Backing the next big thing. Venture capital. It's about funding startups, the next Apples, Googles, and Amazons of the world. You're betting on innovation, disruption, and the potential for massive growth. Venture capitalists provide capital to companies in their early stages, often before they have a proven track record. It's a high-risk, high-reward game. Think of it like this. You're planting seeds, hoping some will blossom into towering trees. Most startups fail, but the ones that succeed can generate astronomical returns. Venture capital is not for the casual investor. It requires a high risk tolerance, a long time horizon, and a belief in the power of innovation. Section 10. International diversification, expanding your investment horizons. Don't keep all your eggs in one basket, especially if that basket is your home country. International diversification is key to mitigating risk and tapping into global growth. Think of it like this. The world is your oyster. Emerging markets, developed economies, each offers unique investment opportunities. Investing internationally can provide exposure to different currencies, industries, and economic cycles. This can help smooth out your portfolio's returns and reduce overall volatility. Remember, international investing comes with its own set of risks: currency fluctuations, political instability, and regulatory differences. But for investors seeking to broaden their horizons and potentially enhance their returns, international diversification is a must. Section 11. Conclusion. Charting your course to financial success. There you have it, folks. We've explored the exciting world of advanced investment strategies. From options trading to private equity, we've covered the tools and tactics used by seasoned investors. Remember, these strategies are not for the faint of heart. They require knowledge, research, and a healthy respect for risk. But with careful planning, a strategic mindset, and a willingness to learn, you can leverage these advanced strategies to potentially accelerate your path to financial freedom. So keep learning, stay informed, and never stop seeking opportunities to grow your wealth. The world of investing is constantly evolving, and the only constant is change. So embrace the challenge, stay ahead of the curve, and watch your financial future soar. Like and subscribe to our channel.